and you are here for the webinar DQC Rule Sets 13 and 14 and the FASB DQC Rules Taxonomy. I want to thank all the members of the Center for Data Quality. You can see their logos up on the screen here. All of them helped make this program happen today. I'd like to go through a few logistical points before we get started and cover off on the agenda. We are offering CPE credit for today's program. So at 2 points during this session, we'll be taking CPE questions. And if you're interested in getting CPE, please make sure that you respond to the questions that you'll see up on your screen. And even if you didn't sign on for CPE to begin with, we can always handle the paperwork on that a little bit later and get you signed up if you haven't. As we go through the program, feel free to submit questions to us by clicking on the Q&A link on your Zoom console, and just submit your questions and we'll take them as we go through the program. And just finally, if you have any kind of technical issues as we go through the program, please email us at support, S-U-P-P-O-R-T, @xbrl.us, and we'll do our best to get you back online. I'm going to turn first to our agenda and tell you a little bit about what we'll be covering today and who will be speaking. We're very happy to have our speakers with us today. We're going to start off with a little bit of an overview on the XBRL US Center for Data Quality and the Data Quality Committee. And that's going to be led by Joan Berg. Joan is the chair of the Data Quality Committee. She is also director of XBRL Services at Topan Merrill. That will be followed by a review of the final Rule Set 13 and the proposed Rule Set 14 by Campbell Pride. Campbell is president and CEO of XBRL US. We'll then take a couple CPE questions, and then finally, but very importantly, we're going to have a discussion with the FASB. And Joan is going to be leading the discussion with David Shaw. Dave is XBRL Supervising Project Manager at the Financial Accounting Standards Board. And he's going to talk to us a little bit about how the FASB has begun incorporating DQC rules into the USGAAP taxonomy. We'll finalize this with a couple of additional CPE questions and then talk about some upcoming programs. So with that, I'm going to turn it over to Joan, who's going to tell us a little bit about the Center for Data Quality. Joan?
Hi, and welcome to our webinar. The XBRL US Center for Data Quality is a collaboration that was formed in 2015 of public companies, service providers, and analysts. And our mission is to address concerns about the quality of the XBRL data, which might make it not usable in widespread application. Next slide. The focus is on data quality issues that impact data consumption. So what we have done is to develop unambiguous guidance and rules. And we do this through issuing exposures of the rules 3 times a year. So for next year, the rule dates that we've established are May 1 to June 15th, August 1 to September 15th, November 1 to December 15th. And we're going to talk today about a couple of the rule sets that we have issued this year. And then the other thing the Data Quality Committee does is we have progress updates with the SEC staff and the FASB. So the work product of this group has been endorsed by the SEC. Next slide, please. Listed on your slide are the members of the US Data Quality Committee. And these rules are developed first by a biweekly meeting by members of the Center for Data Quality. So those members include representatives from Broadridge, Certain, DataTrax, DFIN, RDG, P3 Data Systems, Topan Merrill, and Workiva. And then the group that approves them is a group that consists of preparers, analysts, software providers, and standard setters. So you can see those names listed on this slide. Next slide, please. Now I'm just going to turn it over to Campbell to take us through the rule set that was most recently approved, and then the next rule set that's out for public review currently.
Thanks, Joan. Okay, so I'm just going to go through some of the rules that were introduced as part of Rule Set 13. Hopefully it's not bad luck for anyone when you get errors associated with that. The rule set numbers, we just increment them as we go through time. So the 13 doesn't really have any meaning other than it's the 13th set of rules that have been released. And just so everyone's aware, we kind of go through these, and as we identify errors and filings, we'll add another rule set to the body of rules that we have. And a lot of the rules will really be addressing two things: either one, changes in the taxonomy, which may need rules to support those taxonomy changes, and in addition, where we see problems in filings and we have people coming back to us with feedback, then we'll add rules for those. So the rule set 13 has a couple of both of those, and so we can just walk you through what they are. So the first one, liability revenue recognized. So this rule really came out of some of the changes that came through from revenue recognition, and in many cases, companies will put a roll forward or basically a roll forward of the contract with customer liability, and then give the opening balance, then the movements, and the closing balance. The US GAAP taxonomy actually isn't modeled to support that roll forward, but there are elements in there, and one of these elements in there is a disclosure about how much of the opening balance of the liability was recognized during the period. That element, however, is being used to basically record all the revenue that was recognized during the period. So what the rule tries to do is it looks at the revenue that was recognized, that amount, and it just makes sure that it's not greater than the contract with customer liability at the start of the year. Now, obviously, if you want to do that roll forward, then you're going to have to create some extensions at the moment. I know the taxonomy is looking at putting some best practice elements in to basically address the ability for companies to do a roll forward. But just be careful on that. That's what this rule is trying to check. So if you're doing one of these roll forwards, and you want to look at the total amount of the amount that's recognized, don't use this element if it's including contract liability that's has arisen during the reporting period. So that's the first rule. That's the liability revenue from recognized. And that's really aiming just to basically make sure that the taxonomy is correct. And this rule came out of a review by the FASB. So we go to the next slide, please. Invalid consolidation axes. Okay, this is just really some house cleaning for the taxonomy, so that people don't have to use this element or use this axes in their filings, and then when come the next rollout of the taxonomy, they're not going to be using this axes because this axes has been deprecated. So this rule just alerts you to the fact that this axes investments by consolidated and non-consolidated entities axes. If you've used this, there's another axes that you should be using. So it's just giving you a warning about that. And this will only apply to you if you have special purpose vehicles or variable interest entities. So if you've got those and you've used this axes, then this rule is going to flag, and it's going to tell you to use the consolidated. It's going to tell you to use the consolidated items axes. Okay, we have the next slide. This next rule hasn't really come out of any changes from the FASB. What this rule comes about was just from a lot of mistakes that were still being made in filings. And so the purpose of this rule, it's pretty comprehensive, and what it tries to do is identify missing calculations on the face financial statements. And this rule covers the balance sheet, the income statement, and the cash flow. And what it does is it'll go and look at the items that you've got on any of those statements, and then it'll see if any of those are monetary amounts. And if those monetary amounts are not included in the calculation, then it's going to give an error. Now, these rules basically operate across both of those three statements. So if you see this rule come up, then chances are you're probably missing one of the concepts from your calculation, and it'll tell you what the items are, and then you can go back and have a look at addressing it. We've spent quite a lot of time, particularly on things like the cash flow statement. There's a lot of supplemental disclosures in this rule, in these face financials, which will not be included in a calculation. So the rule tries to exclude those. But if you are in a case where you have a disclosure, it's sitting in your presentation, it's not included in the calculation. If it's a supplemental disclosure, the rule basically tells you, what you can do so that you don't get an error on those items. And what it basically the rule will check for is if you've got a supplemental information abstract type element and you've got anything under that, it's going to ignore those. So there's kind of some guidance associated with this rule. If you do get this error and you don't think it's correct, you should look at this guidance that's on our website, and then you can just say, oh, okay, I just need to set up one of these abstracts, and then this rule will go away, or this error will go away. However, it was surprising to us how many companies had actually missed stuff out, and it usually occurs where you might go back and you'll change your filing and you'll add a new presentation item in, and you just neglect to add that calculation in. So that happens from time to time. There are some filers who just haven't put the calculation in at all. And that's just really going to be it's a good cleanup exercise just to make sure you've got it. It's a good check that just runs just to make sure you've got everything in those calculations. Okay, if we go to the next slide, please. So this just basically details out what the rule's doing and what it's looking at. And this is just taken from our screenshots from our website. So you can go and look at these. And I was talking about the supplemental items there. It just gives you a list. If you've used any of these supplemental items on the headers on the cash flow, for example, it's not going to give you an error. And then it's just gives you a list of a number of different exceptions that are allowed by the rule. So if you don't think the error is correct, then you may want to use one of these just to make sure you don't get that error. You go to the next slide, please. So moving on to, that's Rule 13. Rule 13 is in place. If you run the rules, those are the rules that are going to run. However, we've introduced a new set of rules for DQC, for proposed rule set number 14, and these rules haven't gone into effect yet. We've had a public comment period, and we've been getting feedback on these rules, and we've been running them. A lot of the filing agents have been running these rules on filings and seeing if they're getting errors. Now, just to be aware, this rule set applies predominantly to the IFRS filings. And so if you're an IFRS filer, then these are going to be relevant for you. And I'll go through these quickly. I'm not sure how many IFRS filers are actually on the call. But so the first item is movement of concepts between calculation trees. There's actually a DQC rule for this for US GAAP filers. And this is just really looks for where you've taken an operating item, for example, from the cash flow and move it into a financing investing section, or you take something from the investing section, put it in financing or operating. So it just checks all those different possible combinations someone could do just to make sure they haven't moved inappropriate elements around on the cash flow statement. So that rule that's a proposed rule, and I think that's pretty straightforward. So the next rule, please. Go to the next slide. Element values are equal. So this also mirrors a rule that we have for US GAAP. This rule is basically looking to make sure just basic calculations that you would expect in any set of financial statements hold true. So this checks, that the balance sheet balances. It also checks that you've got current assets. If you've got assets that are equal to current assets and non-current assets. And there are some exceptions in IFRS actually for this, particularly if you've got assets held for sale. And there were specific rules, there are specific elements in the IFRS taxonomy which actually have things like non-current assets or non-current or long-term or non-current assets excluding held for sale. So in many cases where these errors are flagged, it's just really identifying where the wrong elements are being used. You should be using non-current assets excluding the held for sale items. So if you're getting errors for that, that's detailed in the message of these rules. So have a look. But if you've got concerns about it, please reach out to us and let us know. We like to hear from people. And one of the overriding principles that we try to apply is trying to eliminate all false positives. So you're not running around trying to correct an error which isn't really an error. We can go to the next slide, please. Invalid value for percentage items. So we have a similar rule for this for US GAAP, but we just rolled it out for IFRS as well. This is just looking at percentages. One of the issues that continues to come up is when you report percentage items in your XBRL filings, they should be reported as, generally between values between 0 and 1. 90% is put in as 0.9, for example. So what this rule checks for, it really looks for scale errors, and it looks for when the amount's 10 times what we would expect it to be. So anything over 1,000%, this rule is going to flag and say, look, this is a percentage item. We wouldn't expect it to be that. Now, there are exceptions, obviously. If you've got things like tax rates, if you've got very low denominators, some of these percentages can go very high. So we've made exclusions for those. If you do get an error for this and you think it is a valid exception, let us know, and we can add that to the exclusion list as well. Okay, so we go to the next slide, please. Axes with inappropriate members. Now, what this is doing is similar to a US GAAP rule that we've had in for a long time. It's just really checking that the values and the members that have been put on have been used for these axes are appropriate. And there's a number of axes that we added. Or rules that we added axes for. It's certainly not complete, and upcoming rule sets will probably add additional rules based on this rule for additional axes. This was just kind of a first cut for things where we're seeing issues. And there's also some guidance issued around this and why that's the case. And generally, what this rule will do is say you've got an axis and we only expect extension members on this axis, but you've gone and taken items from the IFRS taxonomy and you put it on there. So this rule is really just checking these axes have appropriate members on them. And if they don't, they'll basically tell you, what the reason for that error is. Go to the next slide, please. So this rule here is the equivalent rule for IFRS that we have for US GAAP. So this rule is basically, as I mentioned earlier, is checking the balance sheet, the income statement, and the cash flow, and it's checking that the items that are sitting on those financial statements have an associated calculation with them. Now, we can't have one rule for both taxonomies just because obviously they've got different elements that they use for all of these things. So it is a separate rule, but this rule set 14 basically for this rule here for the no associated calc mirrors the rule that we have for in rule set 13. Okay. Right, so the next rule is assets and liabilities as classified as held for sale using the duration element. This rule we put out for public review, and if you've got any comment on this, this rule actually may get pulled. We've had a lot of comment on this and a lot of cases where people are using this particular element for durational purposes. And when we first wrote the rule and we talked to the folks from the IFRS, our expectation was this axis would be used for classifying balance sheet items and then identifying those which are held for sale and using an axis to do that. However, a lot of the movements and the gain on loss on the assets held for sale is also being using this axis. So we're talking with the IFRS on this. So this rule you may find will be there's a good chance this rule will probably be either amended or removed. Go to the next rule, please. And as I mentioned earlier, we've put out some guidance just on the tagging the axes and members used for IFRS. So that gives you a lot more detail on what these are. And so that rules covers, default dimensions, how you shouldn't be changing those. The assets and liabilities classified as held for sale. There's a rule for that. Continuing and discontinued ops, how you should use that. Consolidated and separate financial statements and what extensions or not extensions you should be adding, and segment consolidation items and the segment axes as well. So it really just gives you some guidance on how those axes should be used, what members should be used on them. And then the rules basically will check that for you just to make sure that that guidance is being met. So I think that's everything, right, Michelle? We're going to hand it over for some CPE questions, or do we have any other questions before we move on?
We don't have any questions right now, but I do want to mention to everybody that they can submit questions by clicking on the Q&A link on the Zoom console, and also thanks very much, Campbell and Joan. We want to make sure that people do go and review the proposed rules and the new rules, and give us your feedback. So with that, I'm going to turn to some CPE questions. And first, I'm going to launch our first poll. We'll be doing 2 questions right now. And the first question is, how many rule sets does the DQC publish each year? Is it 3, 2, or 4 rule sets? So again, for those of you getting CPE credit, please click on the appropriate link so that we can record your response. Okay, we'll give it about another 30 seconds. And then we did get a question, so I'm going to ask that question right after we close this poll. Okay, just another 5 seconds or so. So make sure that you record your response. All right, I'm going to end the polling there. And then, Campbell, why don't we go ahead and take this question? The question that we received is, does DQC 99 flag calculations of only one add-in into a total?
Yes, at the moment it does. And this is, and one of the things that's a bit tricky to work out is that if you have a calculation missing as in terms of relevant, we're doing 2 things here. One is either amending the rule so it doesn't flag those situations, because as the person asking the question points out, EFM requires that you're not required to put a calculation in if there's only one item including in the total. And this is and this happens in cases where someone might have just cash and that's all they have, and then they have total current assets. And so they'll say, I've got cash and I've got rolling up into current assets, and there's only one thing. Technically under the EFM rule, you don't have to put a calculation in for that. We kind of don't like it. It makes it kind of really horrible for people to use the data. That's what the EFM rule is. We are also going back to the SEC on this and asking them, sure, we understand why you're doing that, but does it really make sense on the face financials to do that? I would not. It just is in terms of best practice. I don't think that's a good thing to do because it makes it more difficult for people to read the data. But if you've got feedback on that and you think it's an issue, please let us know, because then we can amend the rule and take that case out. This is very rare on the face financial statements. It's usually going to happen on smaller filers. But if it's a concern to you, please let us know and then we can amend the rule.
Great, thank you. Okay, so we're going to go on to the next poll question, and just the answer to the first poll question: how many rule sets does the DQC publish? They publish 3 every year. Okay, so let's go on to the next question. Approved Rule Set 13 contains which of the following rules? Financial statement with no associated calculation for IFRS filers, or liability revenue recognized, or access with inappropriate members for IFRS filers. Which of those 3 rules is included in the approved Rule Set 13? We'll have about another 30 seconds here. Got another 10 seconds. Okay, I'm going to go ahead and close down the polling. And the correct response to that question was liability revenue recognized, which looks like most people did get. So that's great. All right, so let's move on in our slides. And the next part of our discussion today is going to be a conversation between Joan Berg, again with Topan Merrill, and David Shaw. And Joan, I'm going to just turn it over to you.
Okay, I think we're going to start with a disclaimer by David.
Yes, we are. So it is, the views expressed in this presentation are those of the presenters. Official positions of the FASB are reached only after extensive due process and deliberations. All right.
So the first question I have, David, is what role does the FASB play on the Data Quality Committee?
Well, the FASB taxonomy staff has had a very active role in the, I'm sorry, next slide, please. We has had a very active role in the Data Quality Committee since its inception. At the beginning of the presentation, there was a slide listing the membership, and Louis Mathern, the Chief of Taxonomy Development, was listed as a permanent member. Also on our staff, Tabassum Beg, our data analyst, is a participant to the DQC Rule Development Review Group. And from my perspective, I see this as a very important role for her inclusion in that group, because her participation provides a conduit for the rest of the taxonomy staff in providing input on DQC rules, including rule suggestions for new USGAAP disclosures. And interesting, when Campbell was going through the new rules added in the set, there were a number of them that relate to different ASU topics. I've listed out a couple here. So there's some rules around leases under topic 842. There was a cash flow ASU that there's a couple of rules around that one. And when we have areas such as topical focus projects, like for retirement benefits, in remodeling the taxonomy, there were a number of new DQC rules that came out in order to facilitate the new modeling within the taxonomy. Okay.
Yeah, I think that's been very helpful to have those rules that the FASB has suggested to the committee.
Right.
Recently, the SEC announced the public review of the XBRL US DQ taxonomy. Can you explain what this is?
Sure, I can. Next slide. Okay. So it is a taxonomy. It can be effectively thought of more as an extension taxonomy of the USGAAP taxonomy than really a base taxonomy, because it's not really used like traditional base taxonomies like the USGAAP or the SRT or DEI. And it is very uniquely structured in most ways in which it's designed, which it's predominantly designed for regulator use. It's very compactly structured with minimal files. And that was really just achieved through combining things, certain XBRL elements and syntax into files that in either the USGAAP taxonomy or even the IFRS taxonomy would be split out into different files. So it has a very, very compact structure for the software developers on today's call. One other way in which it really differs from most taxonomies is that it contains no presentation relationships. And I will kind of highlight this a bit later, but it's important to realize that. So when you traditionally view the USGAAP taxonomy, you are looking at presentation relationships, but there aren't any for this taxonomy, and that is due to the narrow focus in designing it. And so most of the information that is being conveyed by the taxonomy is going through custom relationships and using references. But the use of the references is more customization. The information that we're conveying isn't like your typical codification or Reg SX references. And also, we want to ensure that you know that it does not include all DQC rules, just a subset. And we do not anticipate that it would ever cover all of the DQC rules. And that's for two reasons. The first of which is we'll get into a little bit later, but there is a lag to when we would add a rule. We want it to be out in the marketplace for at least 1 year before it would be considered for inclusion in the DQCRT. And also, it would not include any of the rules covering the IFRS taxonomy. Okay.
Well, that makes sense. So for those who want to use the rules, you do need the application that you use to prepare your files to run the rules, or else you can use the freely available application that's on the XBRL US website. So to actually run the rules, you can't run them off of the DQC rules taxonomy, but you can look at them. And so, David, the question for you is, could you walk us through where we can find the rules and the exposure process on the FASB website?
Sure, I can do that. I just do want to point out though that the comment period has closed. We are going to be wrapping up and finalizing the 2021 DQCRT with the USGAAP and SRT taxonomies, but we will be leaving the draft DQCRT up until December 8th if you still want to take a look at it in our taxonomy viewing application. And so if you do have any last minute feedback, you'd be sure to let us know because we are trying to get it wrapped up in the coming couple of weeks. So on this slide, I do have an image of the main taxonomy page on the FASB.org website. And you can see in the bottom left-hand corner, there's a red box with a big arrow pointing at it. And so at the bottom of that box, there's a more, which is a link that if you click on, that will take you to the next page, which is illustrated on the following slide. Okay, so after you click that, you end up on this page. And so in about the middle of that image, it says proposed 2021 DQCRT. And so when you click that, it opens up another disclaimer page, which I didn't provide an image for, but it's your standard issue disclaimer that you have to get through to get access either the USGAAP taxonomy or the SRT taxonomy. So scroll down and then click onto that, and then you end up with at the DQCRT. And so this is just an image I took of just kind of opening it up for some of the rules so that to give the audience a flavor for what's on there today. I did want to highlight though at the top where it's got that red box that says definition link rule concept. That was what I was discussing earlier as far as it's atypical design of it, that it doesn't include any of the presentation relationships. And so if you really want to see the information conveyed in this taxonomy, you have to be looking at the rule concept view. Clicking on the going through the FASB website to get to it, it should take you directly to this page so that you can take a look and see what it's about, and if there's anything you want to comment on or notice, that is welcome. Next slide, please. I also wanted to make all of you aware that it is also available at the URI that's listed at the top of this this image, which is https://xbrl.fasb.org/dqc/dev. But I do want to point out that accessing the taxonomy from this location, it does require XBRL software in order to view it, because if you click on any of those links, the only thing you're going to get is some XML coding, which may or may not make any sense to any of you, or to some of you. Okay.
So the next question is, have you received any feedback on the rules as they've been posted to the FASB?
Yeah, we have received some feedback. I would like to say that the majority of the feedback has come from members of the DQC, including you and Campbell, and largely that the feedback that we've received is on tweaks to some of the rules on some of the items that I missed or didn't really properly convey in the syntax. And so so in these upcoming weeks, that's what I am going to be working on is getting all of that cleaned up. So we, you know, so we're conveying those rules as best we can, you know, for regulator use. And we have also gotten feedback from the SEC, and we have gotten feedback from them since the inception of creating this taxonomy. And it's really focused on a lot of aspects. It's really what rules have we chosen. We've solicited their feedback as far as the ones to add. We've had solicited their feedback a lot on the structure of the taxonomy, and that's how we kind of ended up with the format that we did. And as I mentioned earlier, it's a very compact structure, and I'm not to get too technical, but for the software developers that are on today's call, if you do take a look at the taxonomy, you will notice a number of conventions that are not typically seen in a lot of other taxonomies. Just, you know, really one of them is we have link bases embedded in the schemas, which isn't very widely used, but the 2021 SEC taxonomies have incorporated that. So I would anticipate maybe seeing more of that. We have used some conventions as far as ease of maintenance and some of the information conveyed on those rules, which is an XBRL method of target roles, so that if we make any changes to a set of domain member relationships within the taxonomy, the regular USGAAP taxonomy, we don't really have to worry about updating it in the DQCRT because it's looking to the USGAAP taxonomy to pull in that information and provide those relationships. So so this is, you know, some of the more technical feedback we've gotten on the overall design of how we set up the taxonomy. Next question.
The next question is kind of a little history here. When and how did you decide to begin incorporating the DQC rules into the USGAAP taxonomy? It's not
Sure.
really,
Yeah, next slide.
it's really a separate taxonomy. It's not really into it. I understand that, but
yeah, well, it kind of is and it isn't, in the sense that it is like it's at the, you know, the website. It's a part of the taxonomy, USGAAP taxonomy package, but it's not really referenced by the regular taxonomy. It does reference the regular taxonomy, except I would say in addressing this question, I'm going to take it in inverse order. So I'm going to first provide the how, and then I'll explain the when. So the DQCRT was added to the USGAAP taxonomy with the specific goal of enhancing data quality by increasing exposure to and use of the DQC rules that are provided by XBRL US Data Quality Committee. To achieve the goal of enhancing data quality, we are making the DQC rules available with the GAAP taxonomy. And so this should make the rules more visible to the market and easier for the regulators to use. And as Joan pointed out earlier on the call, but there's no harm in reiterating this, for the preparers that are on today's webcast, the DQC rules should be available in your service provider software. And if it is not, we really encourage you to ask them about it. And there's also resources on the XBRL US website to run the DQC rules. And actually, as we at the FASB, we have used those on our implementation guides that we have done in that are done in inline tagging. Next slide, please. And so now we get to the when part. So we don't have a long history because it was just added for the 2020 US GAAP taxonomy. And like I said, we are in the process of updating it for the 2021 taxonomy. And so for that first iteration, we just started with 3 rules that had been in the market for a few years. They are DQC1, which checks access elements and inappropriate members. DQC8, which checks calculations reversed from how they are presented in the US GAAP taxonomy. And also DQC15, which checks for negative value, checks for the negative values are appropriate. And that first iteration was really focused on laying the groundwork and setting the structure. And so for the second iteration, the 2021 US GAAP taxonomy, it will include those first 3 rules listed. Those are still there, but we're adding 3 additional rules to it. The first is DQC4, which element values are equal. So looking at assets equals liabilities plus owner's equity and some others. Second one, DQC9, which is element A must be less than or equal to element B. And then the third one is DQC48, which looks for required calculation parent elements in the statement of cash flow. Next slide, please.
So can you tell us about the process that you use to, or that you're designing to vet the rules before you actually include them?
Sure, I can. Yeah, next slide. So laid out on this slide, I have this process that we are currently designing and refining, and we call it the DQC Rules Acceptance Program. And so what it is the procedures that we will take in order to gain comfort in including the rules in the DQCRT. And the primary objective of this is really risk mitigation. In the sense that, filers have a concern when they see Edgar warnings. And so we want to do what we can to ensure that they are actually getting valid warnings by running the DQC rules taxonomy. And so on this slide, I've laid out the steps of this process, and we are just going to cover them at a high level today. We could probably have, a good, maybe, well, don't want to commit myself to a webinar on just covering it, but so just kind of breaking it down into the objectives of what these rules are trying to achieve is, the first 3 steps are predominantly aimed at gaining an understanding. And so, so it's, what is the rule meant to achieve? Gaining an understanding of what process the DQC went through in designing and implementing the rules, and addressing the feedback that was received in that process. And most importantly, from my perspective, is understanding what are the risks to including the rule within the DQCRT. And as I've mentioned earlier, we only add rules that have been in the market for over a year, and there's a couple of reasons for that. The first of which is we want to ensure that it's a stable rule, and also we want to ensure that any feedback that has or may have been received on that rule has been adequately addressed by the DQC. So steps 4 through 8, I think of those as more of like the analysis phase of the process. And so what we do or aim to do is do an independently pull the data to compare it to the DQC's results, to ensure that we see, we're getting the same sorts of exceptions to the rule that the DQC is. And then we spend time reviewing those data to try and identify any anomalies that we can look into that may provide some insights into some issues. So, the simple ones would be looking at, is there any concentrations in industries where you see a lot of exceptions to the rule, or if there's certain service providers that may have a relatively high count on that rule. then that also facilitates down about providing results to the SEC and service providers, so that we can ask them if those exceptions are meeting their expectations. Are they seeing that as an error? Because they can be inversely impacted with their preparers and their filers seeing some of these errors. So we want to make sure what we're doing in order to cut that, or to mitigate that risk, and so it's only capturing valid exceptions to those rules. The step 9 process is reviewing those rules on an annual basis for any modifications that need to be included. So like I mentioned earlier, there was a number of changes that we saw as a result of the negative rule. Some elements were removed from that based on some feedback that was received. So we want to make sure we've captured all of that. And this step is also aimed at making sure that the rule is still working as intended, and so we will be doing some more independent verification, and if we see anything that looks out of the ordinary, we may do some more procedures in order to gain more comfort. And then lastly, the annual exposure, which is the process that we just are kind of more or less wrapping up with today, is posting that DQ-CRT for public comment to ensure that to ensure that the public has a chance to provide us input on anything on the DQ-CRT that may be of concern. And as we are currently going through this process and implementing it, so I anticipate that it may change over time, but yeah, we're working on it. Next slide.
Thanks, that's really thorough.
Yep.
What plans do you have for incorporating new rules going forward? Are you thinking it'll be 3 a year, or might we expect the pace to pick up now that once you get your process established?
Well, I would still plan on having a gradual build out of these rules. And that's largely so that we can analyze market response and recalibrate our pace as necessary. I would say that for the foreseeable future, we should probably expect to have about 2 to 3 rules added per year. And we're also going to be spending time, implementing and refining the rule acceptance process, which does take time on our part. And so, we want to make sure that we have a comfort level in what we've added, what we've added and what we're going to add.
Okay, I think that's really helpful. We have seen improvements on the results of the DQC rules. So the number of errors that are being detected has certainly gone down once you added in some of these rules to the DQ-CRT. So the increased visibility that the FASB provides to the Data Quality Committee rules is noticeable.
Yeah, and that's really encouraging.
Yeah. So thank you for sharing with us today, David. I'm going to turn it to Michelle for some more CPE questions.
Great, thank you. Thanks very much, John and Dave. Just one quick question that we received. Are the errors that are included in the taxonomy, are they classified as warnings or errors?
I believe, well, so the Edgar check on the, I believe that the only rule that the Edgar system is currently checking on is the DQC rule 15, and I believe it is giving out warnings and not errors.
Okay, thank you. And then just one last question for you, Dave. You had indicated that, in one of your process steps that you review rules that have been revised. So does that mean that like one of the error types that you've included is negative values? And if additional concepts are added into the negative values by the DQC, then are those just automatically incorporated into that rule, or do those have to go through that process again?
Yeah, well, we will do, some base level checking on those. And as I said, we're building out this process. So that is a good question, and one for us to consider how much we really want to, focus in on just the additions and just the subtractions. I guess you don't really need to focus on the subtractions, but we do want to, just at a high level, at least being able to, ensure that there is a comfort level on what's being added to the rule, because it is a concern with it being in the Edgar system to check these, that that the preparers are getting warnings on that. So we will take a look at anything added, but I don't think it would be out of like the ordinary course of any sort of other procedures that we're doing for any of the rules.
Okay, great, thank you. Okay, so I think now, as Joan said, we're going to go on to our final CPE questions. And but again, if you have questions, drop your questions in. We'll get to those later. Okay, so our third poll question here, which you should be able to see on the screen here, is which of the following DQC rules are intended to be added into the 2021 USGAAP taxonomy? Is it number 1, axis with inappropriate members? Is it DQC 15, negative values? Or is it DQC 4, element values are equal? So which of these is the rule that is going to be added to the 2021 USGAAP taxonomy? We have about another 30 seconds here. Okay, we're going to shut down our polling now. And just so you know, the correct response was actually DQC 4, element values are equal, is the new rule that's going to be added to the 2021 USGAAP taxonomy. All right, let's go to the last question. Do the DQC rules run automatically when you use the USGAAP taxonomy? And the responses are no, or yes for all DQC rules, or yes, but only for rules that have been included in the DQC RT. Which is the correct response to the question, do the DQC rules run automatically when you use the USGAAP taxonomy? Okay, we've got about another 30 seconds here. All right, we're going to close the poll down now, and the correct response was no, they do not run automatically. You actually, I think as Joan brought up, you do have to use either the application on the XBRL US website or run the rules through your own application that you use to prepare your XBRL financials. So that is it for our CPE questions for today. And I do not have a slide showing upcoming events, but I did want to mention to everyone that we do have an event coming up December 15th, which is going to be a webinar we're doing jointly with the Sustainable Accountability Standards Board on bringing XBRL data standards into sustainability and ESG reporting. So I hope that you all join us for that. You can see it on our event page. And I want to thank our speakers today. Thank you very much, Joan Berg from Toppan Merrill, who is chair of the Data Quality Committee, Dave Shaw from the FASB, who is, has been instrumental in helping us raise awareness for the DQC rules, and of course, Campbell Pride, our president and CEO. Thanks very much, and we hope to see you at our next webinar, December 15th.